Hindustan Unilever Limited, HUL, the market leader in FMCG and ranks number 1 in the country, is a share worth knowing more about. Hindustan Unilever share price has been banking on 200 EMA for years starting from 2017, and it has always been touching 200 EMA and moving upwards in an ascending channel till 2021 when it hit a roadblock, and in October it came below 200 EMA, and ever since it has not been able to do a reverse movement and has been sliding, and that is a matter of concern. In terms of return for the last 10 years as compared to Nifty, HUL to start with had on a 10-yearly basis 428% return as against 207% of Nifty. If we take on an annual average, HUL started with 43%, came down to 21% in 2015, and then it slid down while Nifty maintained consistency. HUL had a fall more particularly after March 2018 when its return percentage on an annual basis came down to 9% in 2019, went into negative territory 3% in 2020, and March 2021 it came down to negative 11. Of course, COVID was there in the background, but the fall is quite visible and a matter of concern. Taking the size of HUL, its market cap 5,31,000 crore, its second in the category is Dabur, 5.5 times bigger. 47,000 crores of revenue per annum. Next best is Godrej Consumer in FMCG. HUL is 4.2 times better. Profit wise, 8,000 crores versus 1,720 crores of Godrej Consumer, and once again a distance of 4.5 times plus. It is unquestioned number 1, the biggest number 1, followed by distant 2 and 3, India's FMCG leader, Hindustan Unilever Limited. HUL's strategic move was taking over 2 brands of health food drinks from GSK Consumer Healthcare under a share swap deal in 2020, and that has added to the market strength of HUL, and it has been paying rich returns as can be seen from the financial performance so far. In respect of the deal, which was worth 40,000 crore plus, HUL made a small sacrifice but earned a good return. There was equity dilution. The sacrifice was a dilution of 7.9% of HUL's equity, whereas in the first year of operation, in the EBITDA of the company, contribution of GSK brands Horlicks and Boost has been to the extent of 13.4%, and risk reward ratio has been quite in favor of HUL, which has helped it raise the level of return on equity. Its cash flow on a standalone basis is quite evident that the massive cash flow generated from operations has been largely used in making payment of dividend. Particularly in 2019, 2020 and 21, the cash generation almost 22,000 crores has mostly been appropriated towards hefty dividend payments, and that is where HUL has been operating with no adverse impact on its liquidity position. If you see the trailing 12 months revenue and EBITDA percentage, HUL has performed quite well. From December 2018 to December 2019, a growth of 6.2% on TTM basis. EBITDA moving from 22.4% to 24.8%. December 20, getting into the COVID period, growth has been there for 7.9%, of course with the GSK brands included. EBITDA has fallen to 24.3, but it has risen to 24.5 at the end of December 21, and revenue has moved from 42,875 to 49,863, a growth of 16.3%, of course, including Horlicks and Boost. But on the whole, growth in revenue and improvement in EBITDA percentage up to 24.5%, closer to the latest high of 24.8% at the end of December 19, is very, very positive for HUL. I am Vittal Prabhu, bringing you the weekly video on Stock Learning Simplified. Hope you will find the video interesting and useful. Three divisions of business for HUL. Major division is beauty and personal care, contributing almost 50% of its EBITDA, and it has registered a good growth during the last 12 months of December 21, 11.5% almost growth. Quite rewarding for the company, protecting its growth trajectory. The second division is home care, which is contributing almost 28% of the total EBITDA. It has also registered a growth of around 18% during the same period. And worth noting is the substantial growth shown in the foods and refreshment, including Horlicks and Boost, which forms 23% of the total EBITDA. The growth has been 35%, and that is a great achievement. With all this, we find HUL has been rewarding its shareholders with generous dividends, distributing almost total standalone profits, and the dividend rate per annum has been moving up, starting with the 16 of 2016 and going up to 41 of March 2021, including special dividend. But the interesting point here is, with a good dividend, the yield has been low, even below 2%, and the highest has been March 2016, 1.8%, and March 17, 1.9%, and latest in March 2021 has been 1.7. The main reason being the share price carries a substantially high price earning multiple as against relatively lower sectoral index PE. But depending on dividend yield is not the only focus of investors in HUL. The main focus is on the growth potential of HUL and its capacity to reward the shareholders by way of capital appreciation going forward. If we look into the positive and negative features affecting HUL, on its positive side are the consistent performance of its three segments of mass, popular, and premium. It has got category leadership in major part of its business, strong supply chain and extensive distribution setup, and wonderfully it has been gaining market share in most of its segments. Negative is slowdown in the rural areas, both in terms of value and volume. Inflationary pressures are still there, which remain unrecovered in the absence of price revision, and high margin discretionary portfolio has been slow in staging a recovery. But on the whole, positive outweighs the negatives. Price action data for the last 3 months is almost positive. Although the price has been falling, quantity is not supporting it. It has also appeared below the normal line. Means when both are negative, it becomes positive for the company in terms of share price movement. Delivery percentage has been above the normal line, suggesting less of speculative deals, and order size improving over time is a strength in terms of physical delivery. That way, price action data and its analysis suggests more of positive news and upward movement. And when it comes to Fibonacci retracement, its 52-week low is at 2120, which was hit on February 2021, and which is very closer to the current price of 2171. And the company had hit the 52-week high in September 2021 at 2859. Being very closer to 52-week low, we can also measure that there is one more low which came during COVID in March 2020 at 1757. But going by the price action data and the volume being not supportive of price fall, Fibonacci retracement is quite positive in indicating that the price might not go down to the 52-week low of 2120. On the contrary, there are possibilities of it taking a reverse movement heading up in the very near future. Hope you liked the presentation on HUL FMCG number 1 with a strong portfolio and a very good marketing strategy. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your valuable time, support and interest. Disclaimer: this video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Please seek the advice of a competent professional before taking action of any kind.